And let's talk a little bit more about this in more detail, at least on Toronto's real estate market. We're joined now by Jason Mercer, Chief Information Officer at the Toronto Regional Real Estate Board. And Jason, thank you very much for joining us.
Morning.
Numbers concerning your thoughts on where they stand right now.
Well, I think a lot of what we saw with regard to sales and price especially sort of continues the trend that we've seen, throughout the fall and as we move into the winter where, while we've seen an improvement in affordability, both in terms of borrowing costs and selling price, we haven't yet seen a real movement off the sidelines on the part of buyers. And I think a lot of that just has to do with the lack of confidence in the overall economy, people waiting to see what's going to transpire in terms of our trade relationships south of the border and I would say with China as well.
And are you finding what some of the reasons? I mean, obviously the overall thing is the economy, but within the economy, are there different reasons why people are holding off?
Well, I think if you look at a diversified economy like the Greater Toronto Area, there's a lot of connections with trade south of the border. And so there's a lot of individuals that say, hey, I've seen a real improvement in affordability and all else being equal, I'd be moving off the sidelines and back into the marketplace. But, I need to take on a mortgage or a larger mortgage to make the move I want to make. And so I want to be confident that I'm going to retain my employment and ideally see my income increase over time. And I think there's a lot of households that aren't 100% convinced that's the case at this stage.
And what kind of a role is the changes in immigration that we've seen and we're starting to see? Is that a factor as well? Because I know Toronto is a destination for new Canadians.
Yeah, I think that's certainly a topic of conversation when we're thinking about first-time buyer activity. And so if you think back a couple of years ago, it wasn't only sort of traditional immigration that was driving rental demand, but also a temporary migration, and that's really ebbed. And so what you've seen is a lot more inventory in the rental market and a lot more negotiating power for renter households. And so there's less of a push from, say, the rental market and into home ownership. And so we haven't seen as much first-time buying activity as a result. And so certainly in the condo space, that's one of the factors that's led to lower sales as well.
Yeah, and let's talk about some of the different sectors. Condos first, how are they doing? I know they've been struggling. Is it the same situation now?
Yeah, I mean, if you look at that market, we have seen a real uptick in listings over the past year to year and a half. And so what's that meant is for those people who are active in that segment, they've had a lot of choice and so therefore a lot of negotiating power. And we've seen average selling prices trend lower. I mean, on the flip side of the coin, as we do see some momentum back into the market, as we move into 2026 and beyond, there'll be a lot of buyers, especially first-time buyers, that are able to negotiate a good deal relative to what we had seen, previous to interest rate tightening.
And then is it kind of a bit of a chain reaction because people aren't moving up as well, and we're not seeing movement in the more expensive homes?
Yeah, for sure. And that can also impact the listing side. Like if you have individuals that are saying, you know what, now is not the time for me to make a move, from my current home into something new. You also don't see the listings come online. So you also can't buy what's not available for sale.
And is there any good news? Like, are there any neighborhoods or pockets that are actually going against the grain on this?
Well, I think the greatest news is that we are poised for a recovery in terms of sales as we move into 2026. Like if you think about the income that would have been required to purchase the average price home in the GTA at sort of the top of the interest rate tightening cycle, that was over $200,000, which is well above the average household income in the GTA. And we've seen that come off probably by about $65,000 to $70,000, and so that really speaks to the improvement in affordability. And I think a lot of households realize that, and they have every intention on purchasing a home. They just need to see a little bit more certainty around our economic future in the GTA and Canada-wide.
And can we call this officially a buyer's market right now, or is it still in the middle?
I mean, certainly, buyers are benefiting from more choice than we've seen over the past decade, and that's certainly influenced the trend on pricing over the last few months.
And obviously the economy stabilizing would be the big factor. Rate cuts, we may not see one. Is that still a factor, or are people getting more comfortable with the levels we're at when it comes to rates?
Yeah. I mean, I think, we've seen a lot of relief on the interest rate front. I think there's a lot of households out there right now that are right on the margin of affordability, and so they could benefit from one or two more cuts. But I think on the economic front, we saw some good news over the last month where, the employment numbers were for October were a surprise to the upside, GDP numbers as well. But on the flip side of the coin, we had the Algoma announcement the other day. And so again, I think people are seeing sort of, both positive and negative right now. And as a result, are sort of standing pat. I think if we see more momentum on the positive front from an economic perspective, better news, in terms of our future trade relationships, you'll start to see an increase in home sales as a result.
And just one last question on new home construction. We didn't really get into that. How are we seeing sales there, or is that as stalled as everywhere else?
Yeah, I mean, there's a really strong correlation between the conditions that we see in the resale market and the number of people who are visiting pre-construction sales centers. And, that's both from an end user perspective. If you're up against stiff competition in the resale market, you're prepared to sacrifice some time, purchase a home off of plans for delivery down the road. Same thing as an investor. If you're looking to purchase a pre-construction home off of plans and take occupancy and ownership down the road, you want to be certain that you're going to see, price increase over that period of time. And so slacker resale market conditions have led to slower sales on the new home side.
Okay, Jason, we're going to have to leave it there, but thank you very much for joining us.
You're very welcome.
Jason Mercer is Chief Information Officer of the Toronto Regional Real Estate Board.